Imagine having enough money to buy every NFL team, twice. That's the kind of wealth we're talking about when we mention Warren Buffett. This is not a fairy tale. This is the reality of Warren Buffett's fortune. To put it into perspective, his wealth could buy the Mona Lisa painting 20 times over. Or, if you prefer, it's enough to give every person in the United States a check for over $500. But how did Warren Buffett, the Oracle of Omaha, amass such staggering wealth? Warren Buffett's journey to becoming one of the world's richest men started in a paperboy's cap. Picture this, a young boy in Omaha, Nebraska, up before dawn, delivering newspapers on his bicycle. This was Warren Buffett, who, even as a child, was driven by the idea of making and saving money. His first job was not a glamorous one, but it was a start, and every penny he earned, he saved. His frugality was an early indication of his financial wisdom. He understood the value of money not for its own sake, but as a tool for creating more wealth. At the tender age of 11, he took his savings and made his first stock purchase. 11. While most of us were swapping baseball cards, young Warren was trading stocks. This early venture into the world of finance was a harbinger of the immense success he was to achieve. Even at a young age, Buffett showed an uncanny understanding of finance and a knack for saving and investing. From his paper route to Wall Street, Buffett's journey was guided by his keen interest in the world of finance. To understand Warren Buffett's extraordinary success, we need to delve into his early years, specifically his time at the University of Nebraska and Columbia Business School. Buffett's fascination with numbers and investments drove him to pursue a degree in business administration. His time at Nebraska solidified the foundation of his financial knowledge, and he graduated at just 20 years old, ready to take on the world. However, the defining period of Buffett's formative years came after Nebraska, when he attended Columbia Business School. Here, Buffett was introduced to a man who would change his life and investment philosophy forever, Benjamin Graham. Graham was a well-respected professor and the author of The Intelligent Investor, a book that Buffett would later describe as the best book on investing ever written. Graham's teachings emphasized the importance of investing with a margin of safety, that is, buying stocks for less than their intrinsic value. Buffett was enthralled by Graham's approach, soaking up his wisdom and incorporating it into his own investment strategy. The two developed a close mentor-mentee relationship, with Buffett even offering to work for Graham for free. Although Graham initially declined, he later offered Buffett a job at his investment firm, Graham-Newman Corp. This experience was invaluable for Buffett. Working alongside Graham, he gained first-hand experience in the world of investing, learning how to evaluate businesses and stocks, and how to make calculated investment decisions. It was at Graham-Newman Corp. that Buffett began to develop the investment strategy that would later earn him billions. When Graham decided to retire, Buffett was heartbroken, but also ready to embark on his own journey. The teachings of his mentor had equipped him with the tools and knowledge he would need to navigate the treacherous waters of Wall Street. Armed with Graham's teachings, Buffett was ready to make his mark on Wall Street. In 1962, Buffett made a decision that would forever change his life and the world of finance. Now let's dig into the story of Berkshire Hathaway, the golden goose that laid the foundation for Warren Buffett's immense wealth. Originally, Berkshire Hathaway was a struggling textile company based out of New England. Buffett, with his keen eye for undervalued assets, started buying shares of the company in 1962. Now you might be thinking, why would anyone want to buy a failing business? Well, that's where Buffett's genius comes into play. He saw potential where others saw failure. By 1964, Buffett had enough shares to take control of the company, and he made the bold move of firing the then CEO. This was a crucial turning point. Under his leadership, Berkshire Hathaway began to shift away from the textile industry, which was on the decline, and started investing in insurance companies. This was a smart move, as insurance companies are known for their steady cash flow, providing a stable financial base for further investments. Buffett's strategy was simple, yet effective. He let the insurance companies operate independently, while he used the profits to invest in other businesses. Over time, Berkshire Hathaway transformed into a successful holding company with a diverse portfolio that included everything from insurance and utilities to food and clothing companies. In the world of finance, Buffett's approach was revolutionary. He proved that you don't need to be an industry expert to make profitable investments. What you need is a deep understanding of business fundamentals and the ability to identify undervalued assets. This strategy worked wonders for Buffett. Today, Berkshire Hathaway is one of the largest publicly traded companies in the world, with a market capitalization in the hundreds of billions. And Buffett? Well, he's one of the richest people on the planet, all thanks to his smart investments and strategic decisions. Buffett's astute investments turned Berkshire Hathaway into a powerhouse, laying the foundation for his immense wealth. And that, folks, is the story of how a failing textile company became the golden goose of the financial world. Behind Buffett's success is an investment philosophy that's as simple as it is effective. What sets Warren Buffett apart is not just his impressive wealth, but his unique approach to accumulating it. While many in the fast-paced world of Wall Street chase quick profits, Buffett's strategy has always been about the long game. His philosophy is built on the concept of value investing, a strategy that involves buying stocks that appear underpriced by some form of fundamental analysis. In other words, Buffett seeks out companies that, in his opinion, the market has undervalued. These are often businesses with strong fundamentals, such as robust earnings, solid management, and a sustainable competitive edge. Now you might be wondering, why would anyone sell a stock that is undervalued? Well, the stock market is a complex beast driven by a multitude of factors. Fear, speculation, and short-term market trends can sometimes overshadow a company's intrinsic value, leading to price drops. And that's precisely when Buffett steps in, purchasing shares at a lower price with the expectation that, eventually, the market will recognize the company's true worth. But Buffett's strategy doesn't stop at identifying undervalued stocks. He also places a strong emphasis on holding these investments for the long term. Buffett is often quoted as saying, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes." This perspective is a stark contrast to the common Wall Street mindset, where high-frequency trading and short-term gains often rule the day. This patient, calculated approach has not only allowed Buffett to amass his fortune, but has also profoundly influenced the world of investing. It's a reminder that investing isn't about following the crowd or chasing the next big thing. It's about careful analysis, patience, and above all, sticking to your principles. By sticking to his principles, Buffett not only amassed his fortune, but also changed how many view investing. His philosophy serves as a beacon, guiding investors towards a path that values substance over speed and longevity over fleeting success. Warren Buffett's journey is a testament to the power of smart investing, patience, and a keen understanding of business. His legacy is etched deeply into the world of finance, but his impact extends far beyond the stock market and boardrooms. Buffett's name is synonymous with success and wealth, but equally with philanthropy. He's not just a billionaire, he's a billionaire who has pledged to give more than half of his wealth away. In fact, he co-founded the Giving Pledge with Bill Gates, encouraging billionaires around the world to commit to donating a majority of their wealth to charitable causes. This initiative, like Buffett himself, is a beacon of hope, a stark reminder that success and generosity can and should coexist. Moreover, Buffett's legacy is also one of education. He has always been passionate about sharing his knowledge and wisdom with the world. Through his annual letters to shareholders, frequent interviews, and public speeches, he educates budding entrepreneurs and seasoned investors alike, instilling in them his philosophy of value investing. But perhaps the most important part of Buffett's legacy is the example he sets. His life, his choices, his actions, all paint a picture of a man who understands the true value of money, not as a means to ostentatious luxury, but as a tool for creating positive change. From paperboy to billionaire, Warren Buffett's journey serves as an inspiring lesson in frugality, patience, and intelligent investment.